When we're talking about a PE ratio, we're talking about the price that somebody pays to own a company and the earnings after tax of what that company will produce in 1 year. So let's take Microsoft as an example. Microsoft's PE today is 35. This is a very high quality equity company. They've got giant moats with their intellectual property. They got their tentacles and everything. This is a $2.73 trillion market cap business. So if you took all the shares outstanding and you added the value of all those shares up, the value is $2.73 trillion in market cap. But the thing that a person, because a lot of people would look at this and say, well, Microsoft, every computer in the world has Microsoft on it and everybody's using it. Of course, it's going to make a lot of money, right? Well, it does make a lot of money. It makes about $75 billion annually, okay? But the question is, how much are you willing to pay to participate in earning $75 billion? And the answer is you'd have to pay $2.73 trillion to own that revenue or that free cash flow generating stream of money. Okay, that's a lot. That means that if I was going to break it down really simply, going back to the PE of a 35.5 on this company today, that means for every $35 you spend buying Microsoft, you can expect them to earn $1 a year later. Okay, it's that simple. It's a ratio of 35.5 in the numerator, and in the denominator is always 1, which is the $1 of earnings that they earn for that price. That's the simplest way I can describe it. It doesn't get any easier than that. So if we were going to say, well, how much percentage-wise am I going to get for that $35? Well, if you take 1 divided by 35, it gives you a percent. And it tells you the yield or like how much money you could expect to get every year. Okay, so when you do that math, and if we were going to use 33.3, we'd make the PE really simple because then we know it's a 3% yield because it's 1 divided by that number and you come up with the yield. So let's just say that the PE for Microsoft is 3% annualized based off of that price. So even though they're making $75 billion a year, because the price that you're going to pay to own it is so incredibly high, you're only going to get a 3% yield on an annualized basis for owning that stock, okay? This just isn't Microsoft that is priced so expensively, okay? The premium on all equity around the planet is really, really high. Like I would say a cheap, at least for publicly traded businesses, cheap equity is like 25 times earnings. High quality equity is like 35 times earnings, like Microsoft. Okay. So let's just say it's a PE of 25. 1 divided by 25 is equal to 4%. So even though the PE is 10 lower than the Microsoft, you're still only getting 1% more by owning this other stuff that's not even as high equity or high quality equity that has as big of a moat as Microsoft's to own it. Okay. So we've defined the value or the IRR, a very generic internal rate of return that you would get to own like really high quality equity. It's between like 3 and 4% annualized. Okay. Let's now do the analysis on what's the compound annual growth rate that Bitcoin has demonstrated over the last 10 years. Okay. Now that doesn't mean that it's going to continue to demonstrate that compound annual growth rate, but everything that I'm seeing is that it is going to do that from, a network adoption standpoint, from people building on top of layer 2 to people, when you look at how many coins haven't moved in the last year and it being over 70%, which is higher than any time in the history of Bitcoin as far as speculators versus investors. That's the highest ratio I've ever seen. You got all of Wall Street getting ready to buy an ETF and start plowing all that buying power into the spot market, and it's going to be self-custodied, or it's going to be stored and not put back onto the market for all the people that own those shares. And the list goes. You got a halving event that's coming up in April, and I could go on and on and on and on. You got GAAP accounting rules that are making it more favorable to put on companies' treasuries, and I'm out of breath, but like all of those things are why I think a person needs to look at the previous compound annual growth rate and take it very serious that that's what might continue to exist moving forward, and especially into the coming 2 years. Okay. So what is that compound annual growth rate that we've seen? On the lowest, and I'm taking 4-year periods of time. Okay. You pick the 4-year period. I don't care what it is, but pick out any 4-year period historically in Bitcoin. And when you do that assessment and you look at what that compound annual growth rate is, on the high end, it would, over a 4-year period of time, it was 178% annualized. Okay. Annualized. On the low side, it was 24%. And this is you picking any 4-year period you want. Okay. If I had to guess on average, you're probably around 75% compound annual growth rate. Okay. But let's be conservative. Let's be conservative here. Let's say it's 50%. Okay. If it's 50%, okay, that means what in PE terms for equity, what would the equity have to be priced at to give you a 50% return? And it's a really simple calculation because you go back to your PE and all you're doing is you're taking 1 divided by whatever the PE ratio is. And when you take 2, as Andy held up, you get a 50% return, right? So now when we look at Microsoft, because this was one of the questions that I saw somebody asked on Twitter, it was like, what would Preston be willing to pay for Microsoft? Okay. Well, today Microsoft stock is at about $360 a share, or in that ballpark. Okay. So a PE of 1, you take the 35.5 and you're dividing it by the stock price of $360 and you're like at around $10. Okay. A PE of 2 makes it $20. A PE of 2 makes it a CAGR of 50%. Okay. So this is how Preston Pysh, and I know that if you lined up 10,000 people off the street and you asked them what they would be willing to buy Microsoft for if they were living in a Bitcoin world, or they're seeing Bitcoin as the new settlement layer, and I said $20 and the current market price is $360, that person's going to look at me and they're like, that dude is off his rocker. Crazy. Idiot. Doesn't know what he's talking about. Okay. But I don't even think I would pay $20 for it because they have to continue to compound at that rate for it to hold up to what Bitcoin's done. So the number's actually lower than $20 a share for a company that the world thinks is worth $360. Okay. This is how I look at the world. So when people are looking at me and saying that guy's crazy, even though if I could show you the return since 2015, you would maybe understand why I think you're crazy. Okay. And if you want to hear my math on what I think the equity market should be priced at, you just heard it. Now go have fun and laugh and snicker. And I'm just going to continue to sit here and squat on these coins and enjoy the living hell out of my life. Let me tell you.